Hi guys, my name is Philip. I'm the creator of HorseRaceTrading.com, and in this video I want to talk to you about trading pre-race horse markets full-time on Betfair and what you need to do to become a successful and profitable trader. Okay, so stick around and I'm going to talk you through these 5 points here: avoiding emotional betting, understanding compound interest, understanding long-term thinking, understanding failing forward, and understanding what you have to do to become a full-time trader. Okay, so stick around and let's jump into this video. I'm going to show you and talk to you about how to become a full-time trader on the pre-race horse markets. Okay, so with that in mind, let's cover first, avoid emotional betting. We all know this one, right? Let's face it, we're in this business because we all love to gamble in some way, shape or form, right? We've all, we all probably came into the whole the trading thing through match betting and those kind of things, and we slowly merged into the full-time trading because it's such a profitable and simple way to make money. But the problem is, if you are from a gambling background, then chances are you are going to be an emotional bettor. And if you let your emotions guide how and when you enter a market, or how many ticks profit you take, or whether or not to exit the market, that's really going to hamper your growth rate. Because when it comes down to you and your gambling history, if I jump inside here to Leicester at 1 o'clock, for example, into the BetAngel software, if you're from gambling history and you're sitting here and you're using, for example, 200 stakes, £200 stakes, and you've only got a bank of 1,000, you're letting your emotions dictate your greed and when and how you enter the market, and most importantly is letting your emotions are dictating how much you stake. And an emotional gambler will always bet too much per trade. And also, I think we've all been in a position where we've entered the market, the position goes against us, it goes in the red, and we panic. And instead of doing what's rational and actually judging that situation based on what's happening on the market, we all tend to let emotions dictate. Oh, shall I get out or not? Shall I wait? And then you sort of get stuck with that classic, a deer in a headlight scenario where you end up doing nothing and your losses mount up. So when it comes to the emotional side of things, guys, you have to be in control of your emotions, otherwise you are going to lose money, guaranteed. Now, obviously, there's a crossover here, because emotional betting is a good thing, because at some point you are going to make a mistake, and usually it's down to your emotions, and it's important for you to be aware of it and be self-aware, so that when you do make emotional decisions, take a break, take a step back, go and have a cup of tea, a beer, a glass of wine, a joint, whatever you need, come back and reassess and try and isolate what's causing you to trade emotionally, and try and remove that sort of part of your business. Okay. The second point, guys, you need to understand is compound interest. Okay, compound interest is, again, this ties into the whole bankroll and how you manage your staking amount in comparison to your bankroll. Okay, so for example, again, if I come in here and I go into one of these markets, if I have a bankroll of £1,000, which is I think is a fair amount, because that's usually what most traders start with. Let's say you start with £1,000 bankroll. If you look up here, guys, if you're using £200 stakes trading on a market, and if you only have £1,000 bankroll, that is a disproportionate amount of staking, because your losses and gains are way too big per trade. You need to trade with a realistic stake amount of, let's say, £5 or £10 per trade. Why? Because if I enter the market here at, I'll lay here, you can see here that the potential profit on the left and right, up and down here on red, the green and red, the potential profit is proportionate to my overall bank. Okay, so if I were to try and scalp out here for like a 7 pence profit, you may think, well, Philip, what's the point in that? 7 pence, you can't live off that. Well, no, but this is when the idea of compound interest comes into play, because your results are not beholden to one single trade. It's down to the overall compounding interest nature and the overall growth of your average trades. So if you consider the fact that you, over the course of one day, you have, let's say, 20, 30 races, and if you can average, let's say, only 50 pence profit per race, guys, by scalping, swing trading, whatever you try and do, if you can average 50 pence profit per race, and you're using very small stakes in proportion to your bankroll, it means that your emotions are in check, because whenever you enter a trade, like now, if this trade goes against me, and I'm only losing 7 pence, 15 pence, 22p, I don't care. It has no emotional bearing on me, because in relation to my bankroll versus my losses is tiny. So I can allow my emotions to be in control, and I'm more likely to have a successful trade, right? Which means that if I make more successful trades, I'm more likely to make that 30, 40, 50 pence profit per trade. Now, if you come to a calculator, like if you go and you search for compound interest, and just for fun, guys, if you actually consider the fact that, let's say for argument's sake that you have a bankroll of £1,000, okay? And you want to, let's say for argument's sake, you achieve, let's say something low, like let's say you make a 30 pence profit per trade on average, and you're doing, let's say 10 races per day, okay? So you're making £3 per day, and you may think £3 per day, that's, Philip, what the hell are you talking about? That's tiny. Well, not when you consider compound interest. Because think about it, guys, if you start with £1,000 bank, and you bet, let's say £5 per trade. Yes, the incremental price points here are tiny on an individual trade, but if you compound that over time, it grows, because obviously as your bank grows, so does your staking amount. So if I increase that to £10 and £15, £20, £30, and so on per trade, it means that as my bank grows, my emotional control grows with it, because when I enter a trade at £10 and my bank is £2,000, right, the incremental price points here are equally disproportionate in terms of my emotions, which means I'm in control of my emotions, because I'm not fixated and emotionally controlled by the amount of losses or potential profits, right? So if you go back here again and consider the fact that £3 is the equivalent of 0.3%, okay, of 1,000. So let's say for argument's sake, okay, this calculator here is, this is just a sort of an illustration, okay? It's not accurate, it's just for illustration purposes here, right? So if I imagine myself, if I can increase my bankroll by 0.3% per day and compound that, right? And every single day I attempt to increase my initial sort of bid based on that. Okay, you can see here over time, you can see how this compound nature really grows faster and faster and faster. And as you can see here, by the end of like month 5, if I've got a bankroll of 1,500, but I'm doing it in small incremental steps, it means that by the time I've got 1,500, I can increase my bankroll here to, let's say, £10, in which case my profits start increasing. Okay, I'm just going to scalp that out there so it doesn't stay there. So I'm hoping you see what I mean there by the whole idea of compound interest. Okay, I'm only using this out here for illustration purposes, but if you have a correlation between your bankroll and correlation between your bankroll and your staking amount, and if you have that as a very small percentage of your bankroll, you are then as a result, you are in control of your emotions, right? Now this here again ties into number 3, which is the understanding long-term growth. As I just discussed here, you can see how by using compound interest, the growth is slow, it's steady, but it's safe. Okay, and if you're able to harness this, what you can do is you can grow faster and faster, because you can increase your betting amount faster and faster, because you become a better trader. Okay, and if I bump this up here, if I make this 1,500, again, you can see how, and again, we should hit that 0.3%, you can see how much faster this grows, even faster, right? So you can see how every single day your compounding nature will grow and grow and grow. And again, it comes in that notion of long-term thinking. Patience and long-term thinking is absolutely vital to understand this, guys. Otherwise, you are going to lose money. The 4th point here is failing forward. Again, failing forward, so important. This ties in with long-term thinking, compound interest, and understanding the market and all stuff. And failing forward, most of your trades, guys, a lot of them are not going to go in your favor. You're going to fail, and you need to understand and learn from your mistakes. It's so important, okay? So pause the video here, have a read, or just click the link below and watch the video. Actually read this, guys, about long-term thinking. It's so important. You're going to make so many mistakes. And for you, and the last point, number 5, if you want to become a full-time trader, guys, to become a full-time trader, you have to be basically grow a pair of balls and realize that it's going to take thousands of hours of practicing, trading, practicing. And if you want an extra little tip here, record your trades, okay? Download the recording software and record yourself trading, because that means you can go back and watch yourself, and you can see exactly, you can pinpoint to the minute second where you made mistakes, and you can learn from that so fast. And so I'd urge you guys, if you want to become a full-time trader on a horse racing markets, please guys, be realistic. Avoid emotional betting, understand compound interest, and actually apply it to your business. Understand long-term thinking, fail forward, and if you can harness those 3 there, or 4 points there, you will become a full-time trader by practicing, failing forward, trading again and again and again and again and over, trade as many markets as you can to learn, to practice. And if you have a logical head on your shoulders, you will go far, okay? So with that in mind, guys, please like and subscribe to my channel. I'm going to be continuously releasing more and more videos like this to help you become a better trader, okay? So thanks, and I'll speak to you again in the next video.